presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Al in Homosassa. Hey, Al, what's going on?
Isn't it wonderful? This gentleman here with the gold report, right before the market fell apart, ended up with PAAS. We had a 98% gain in a year. And, you weren't 99% proof like Irish whiskey, but we had a good gain there. You always told us to do what we feel comfortable with. And if I lose a little bit of money on the table, I will, but I know that I just pocketed $8,000 or $9,000 in 2 weeks.
That's a beautiful thing, man.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 7 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. So everyone's having a great day, safe day. October 4th, folks, let's make it a great month. Don't take anything personally. Transform your life. When you refuse to take things personally, you avoid many upsets in your life. Your feelings of anger, jealousy, and even sadness will simply disappear if you don't take them personally. That's a good card. The real question is that how do you not take them personally sometimes? I know. Market-wise, let's take a look at it out here. We have the Dow Industrials down 319, NASDAQ off 289, S&P's off 53, gold contract up $7, trading at $7.65 an ounce. We have silver up 7 cents, $22.60 an ounce. Light sweet crude. Look at this move on light sweet crude, man. Up $1.76, $77.64. Notes and bonds. We have the 10-year right now down 4 ticks, 132.01. 30-year off 10 at 160 flat. And good old King Dollar. King Dollar's down 229 ticks, trading out at 93.806. Euro 116, yen 110.97, the British pound 136 to 1 US dollar. Let's get over to our man, Mr. Dave Mazda, as you do each and every other Monday. And folks, Dave is the managing director, head of product at Direction Shares. You can come over to our website at TFNN. You'll see the Direction banner. Hit that Direction banner, and as you hit that banner, you're going to see that we got a new infrastructure bull, DOZR. Dave Mazda, how you doing today?
Doing well. Happy to be back.
That's a beautiful thing. We appreciate you coming back. You know, and as I was hitting the banner this morning out here, I'm seeing, talk to me about, this is pretty cool, man. Now, I know this bill didn't go through on Friday, but this bill's going to go through, man. That's the bottom line. This actually gives people, this is pretty cool, man. I mean, you're all over this. So talk to me about this new ETF that you have here.
No, appreciate you picking up on it and appreciate the idea here is that there's a real opportunity from an infrastructure standpoint. I think it was clear that for long-term investors, that's something that people might step into, particularly, just think of the fact that we know driving around, no matter where you live in the U.S., our infrastructure needs some work, right?
Seriously.
In fact, you know, we have a pretty low grade from a scoring perspective. But there's also a trading opportunity because, as you note, this bill is likely going to go through, but it didn't. So these stocks got hit. And when it does go through, it's still unclear because we know how Congress works of exactly where this money gets spent. So traders might see that can use this fund, DOZR, as an opportunity to get exposure to U.S.-centric infrastructure companies. And that's important here, particularly from a trading perspective, because a lot of people see infrastructure, you think of just these massive utility companies. They're more global, very European focused. These are kind of your picks and shovels, US-based companies that are going to benefit from a US-specific bill that's likely going to go through Congress, whenever that might be.
Totally. You know what is really cool about this, Dave and folks, okay, is that, I would say that in a longer term aspect, I mean, this is not only going to go through, this could start off slow, but these companies are going to have some good cash flows for 5 to 7 years, which is really cool, man. You don't get a lot of shots. And it does. I'm not saying, folks, things are going to go to the moon. What I'm trying to explain is that when you do have a policy shift and there's that much money that's coming in, well, everyone loves those green checks, Dave. And these companies will like them, too. I mean, so it's going to be pretty interesting watching this shake out.
No, you're absolutely right. And look, at the end of the day, we know the situation in Washington. In fact, every side of the aisle points fingers at one another. But it's not how the sausage is made. It's uncomfortable to feel it and experience it. But the one thing that both parties are agreeing on is at the end of the day, infrastructure, whatever size it might be, it makes some sense. All the other things to be determined. And then on the other hand, state and local governments are going to be incentivized to be committing some more capital along with the federal stimulus. So to your point, the companies in this particular portfolio are going to see an opportunity from those recurring revenue streams, but the path to get there is going to be far from certain. So just like we've seen from an overall market perspective with some choppiness in October, a lot of these infrastructure names are probably going to be in an environment of really kind of some whipsawing, especially until we know with greater specificity what's actually going to be in this package and where the check's going to go.
There's no doubt. And at the beginning of the markets, folks, that's kind of how it goes. Now, which is really cool, I mean, we have a tradable market, both sides, whether you want to be either a bull or a bear, folks, okay? And this is where these direction ETFs really come in, because whether we can talk the banking sector, we can get into the oil sector. We're talking some big moves in some of your ETFs here, Dave, which is really cool, man, because we haven't had a two-way market in a long period of time. Like I'm sure right now there's a lot of folks that think we're going to take another leg down. There's a lot of folks that think we just hit a bounce and we'll go up. So in both cases, we got some really good action out here.
Yeah, exactly. Look, September was an uncomfortable month. I think people were hoping October would see that bounce. Not seeing it today, clearly. What's interesting is, though, for traders, and this is really where the opportunities emerge, is that you have this two-way market, right? And we have this real push-pull, especially, depending upon how you want to cut it. Long duration versus short duration in fixed income, value versus growth in the equity market. Sector-wise, look at the spread just today between energy and tech. Right. And that's something we haven't seen in a while. So I really think traders can see a real opportunity where we're seeing real activity, probably not a surprise. A lot of activity happening in our energy funds, oil and gas, gush and drip, but also still happening in Tech L, Tech S, SOX L, SOX S. So traders haven't given up on this eventual semiconductor rebound. I think the next 2 weeks are gonna be a pretty messy market until we get into earnings season. And that's actually when we're gonna start hearing from companies again what's really happening from the supply chain perspective. And that's really where some of these winners and losers are gonna continue to emerge. So I'd say traders kind of, stay close to your screens, stay close to the keyboards, because there's some technical things that are happening which are unique, and then there's this kind of macro backdrop that's making the trading environment much more two-way than it had been for the better part of 2021. I
know, which is so cool. I mean, and what has happened, of course, is that now we have the inflation deal that's out there, inflation, non-inflation. I mean, we get some great movement, man. There's no doubt. Well, listen, Dave, it's always a pleasure. Thank you so much. You have a great week, safe week, and we look forward to having you on 2 weeks from today.
Thank you for having me. Look forward to chatting again soon.
Absolutely. Have a great one. Have a safe one. Stay right there, folks. We're going to be coming right back. We have the Dow Industrials right now down 326. NASDAQ is off 310. S&P's off 56. We'll come right back.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right. information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow Industrials right now down 358. We get the Nasdaq off 325. S&P's off 59. Let's go over to our man, Mr. Steve Rhodes, as we do each and every Monday at 20 past the hour. And don't forget, folks, Steve has an outstanding show every trading day right here, 1 to 2 Eastern Standard Time. Also, a great newsletter, Mastering Probability. Now, it's very easy to get Steve's newsletter, folks. Come over to our website at TFNN. You're going to see it right under featured content. You just hit Mastering Probability. You hit subscribe. You can get Mastering Probability for 1 month for $149. You can get it for 6 months for $695, which is a savings of $199 or 22%. You get it for a year for $1195, which is a savings of $593 or 33%. Now, they all come with a 30-day money-back guarantee, folks. So the bottom line, you come over, check it out. It works for you, great. It doesn't work for you for some reason, you get your money back. You get everything to win and 0 to lose. Steve Rhodes, what's going on?
Well, I think it's going to be rocking and rolling in Boston tomorrow night at 8:05 p.m. Actually, probably before then, but that's the playoff game between the Yankees and Boston.
Yes.
So that should be. We should get a couple tickets, Tom, and fly up on your plane up there and go catch the game.
That would be a beautiful thing. Especially if we could find my plane. I like it.
Exactly. And then how about Tampa going to 3-1?
I know.
And you've got the Patriots at 1-3.
Yeah, and you talk about a nail biter, man. That was a trip in general.
Absolutely.
Field goal city, right? And then it hits you didn't see it, folks. It hit the goalpost at the end. I mean, I'm glad Brady won. I'm glad Tampa won, but it was, I guess it's in the cards. That's one of those that's okay, man.
Has it been difficult? I mean, I have to imagine you were a Patriots fan originally. Yeah, so you're just a fan of both teams, but you just pull more for Tampa at this stage?
I do.
It's like you can't really lose, right? Either team
it blows my mind that they blew it up there, and then he comes here, okay? Yeah. Brady's amazing. I mean, he's just a great guy, too. So it's like, all in all, give me a break, man. I'll follow Brady wherever he goes. Well, I love Mahomes, too, man. I just like good players. I like how they play. I like when they move out of the pockets, and you know what I mean. It's a whole different ball game.
Yeah, great crop of quarterbacks out there.
Yeah.
Really a great crop. Yeah.
Right. Well, you know what's cool is we were talking about it's just like the New York crop of golfers that are coming up, man.
Yes.
It's just there's just a lot of talent out here, which is really awesome, man. Yeah.
Yeah,
totally.
yeah, absolutely. Well, let's take a look at the building blocks, or a couple of the building blocks of the markets here. And first, just start out by trying to understand the bigger picture and what might be going on. So we're going to focus here. Keep my cursor going. One of those building blocks are the TAS market profiles. And those are the colors that you see on the screen there. So when we take a look at the TAS market profiles, they help us to identify buyers, sellers, and where both buyers and sellers believe price is fairly valued within the profile. So right up here, we can see there's a new profile that's formed. This is the Dow Equity Future Contract. This is for its quarterly time frame. Again, we're taking a big picture view. Oh, shoot, the charts aren't. I'm sorry. My apology out there.
That's
Tom,
okay.
I started the stop this sharing here. Let's see if I can get the right screen. There we go. So now let's get the right screen. And so we'll just start back here.
We got it.
So let's just start back here. So the building blocks, folks, that I'm talking about right now are the TAS market profiles. And those TAS market profiles, they help us to identify sellers. They're at the top of the profile. On this chart here, they're at the top at this little red line. And this is a brand new profile for the quarterly time frame. So again, just take a look at a bigger picture here for the Dow. Both buyers and sellers reside at the center of a profile. So that's this little yellow line that I've got. And at the bottom of the profile, the green line, that's where buyers reside. So what's cool about this is we know that there's sellers are just sitting out at the 35,431 level. Buyers are sitting down at 22,811. I'm not saying price is going to get down there, but if it did, that's a potential buy point. And then both buyers and sellers believe within inside this range on a quarterly basis that 28,219 is where price is fairly valued within that entire range. Okay, when the center of the profile is closer to the bottom versus the top, what that does for us is that generates a bullish structured profile. And that means that as long as price stays within inside this level, we should see price get up to the top of that profile. And if price closes, and this is the white little rectangle area that I've got out here, so you can see the lines. It's very clear. Now, the reason that's bullish in structure is because at that center has both buyers and sellers. But at the bottom, it's just buyers out there. So there's more buyers within inside that range, and price should hold that level. Doesn't always, and when it does, it gives us an important piece of information. So understanding bullish and bearish structures really help us out. In fact, if we take a look at another thing that is also important to look at is where do new profiles form versus the prior profile. And at this stage here, we can see that the new profile here has formed above the prior profile. Now, what I mean about that, folks, is that the bottom is above the prior bottom, the center is above the prior center, and the top is above the prior top. Now, that tells us that over the bigger picture, from a quarterly standpoint, that the trend is still bullish, remains bullish. If we take a look at the 2020 decline inside the Dow Equity Future Contract, what we're going to see is price came right back to the bottom of that profile. That green line, that was at 17,478. That was the bullish structured profile that we were just taking a look at. No, we were looking at the bullish structure one before that. This one, too, was bullish in structure. So, again, larger picture with a new profile forming above the prior one says that the larger trend, the bullish trend, is still in place out there. Now, our overall conclusion that the bull market is alive, and the proof of that will be a close above 35,431. That's where the sellers reside on a quarterly basis. So we're not there, but if price does close above that, that tells us truly, that gives us the confirmation that the bull run is going to go ahead and continue. Now the NQ has formed a new bearish structured quarterly profile. So we've got the Dow with a bullish structured profile, the NQ with a bearish structured profile. In this case here, the center of that profile is really key. Again, buyers and sellers exist there. If we see the NQ close below 13,876, that's going to suggest that price could push all the way down to the 93.14 level. We're not there yet, but 13,878 is a real key level of support. The ES itself has not formed any new quarterly profile, so there's nothing new that I can share, Tom, with you or our listeners out here with regard to that. But the bullish trend is still in place here for the ES Mini. Again, we're talking bigger picture. If we back things up and we go to a weekly time frame, we can see the Dow Equity Future Contract weekly time frame. It's slightly bearish in structure. And this is what's really important is not where price is trading today. This snapshot was taken several hours ago, but where the close is on Friday. We can see that last Friday's close was right on the center of that profile in that 34,189 area. But if we get a close below 34,189 on a weekly basis, this tells us that the Dow should, or the YM should target the 32,327 level. From a daily standpoint, when we take a look at the Dow. The real key level to be watching here is 33,478. Now, on this white background chart here, Tom, I don't have my A to B equals CD tool. So what I do is just simply draw a blue line from the A point to the B point, and then just simply take that exact same line, figure out where that C point is. And so that just gives me the range of where the A to B equals CD pattern or Gartley buy. And the way that those form for me and get confirmed is with a bullish reversal candle. And that was a three-river morning star. So 33,478 is a real key level of support. That's really important because we've just entered that favorable seasonal cycle. So want to keep an eye out for lows. We'd like to see those occur with bottoming signals in all 4 equity future contracts. So 42.9375 is the key level for the Dow. This we're looking at a daily time frame. 14.537 for the NQ, 33.478 for the YM, and 21.46 for the Russell 2000.
Nice update, man. The beautiful thing.
Thanks.
Listen, folks, real easy to get Steve's newsletter. Come over to our website at TFNN. As you come over, you're going to go right under featured content, mastering probability on the right-hand side. Steve, have a great one, safe one. We look forward to the show tomorrow at 1.
Thanks, Tom.
Stay right there, folks. Come right back.
Are you having fun trading the markets, but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials right now are trading down 350. Nasdaq's off 346. S&Ps are off 60. Let's go inside the NDX 100 first. We'll take a look at the strength versus the weakness. Weakness out here, Peloton's down 5.5%. You got Facebook off 5.5%. NVIDIA's down 5.5%. And OTKA is off 5.3%. Some strength, but there's no strength in there. You got XL Energies up 2%. You got American Electric up 1.8, and you get Fox up 1.8. Inside the Dow Industrials, strength versus the weakness. Come on, baby. Back. Index. Strength versus the weakness inside the Dow Industrials. Point-wise out here, you have Microsoft putting 46 negative points, United Health 43, Goldman 40, positive 11 points, Merck. So some of the higher volume equities out here, and we're going to have some volume out here today. Some of the higher volume equities, well, look at this. They took Microsoft south pretty good. You got Microsoft down $7, Apple's down 4. We got JP Morgan off 57 cents, Visa's off $6. You get Walt Disney down 3. We get Salesforce down 5. Amgen's down 2.5, and Home Depot's down 3.8. Let's go to Home Depot first. HD. Let's see what's happening in the home front out here as we get a little pullback going. Okay, so Home Depot's down 391. But yeah, you come into high volume low. I mean, Home Depot, I mean, it looks to me like this area of 316 can get tested. The top of that is a 323, and you're coming down there with lighter volume. Let's go to Microsoft. Someone's really unloading Microsoft, man. This move on Microsoft's pretty wild. You know, in the last 3 days, we're going up and down $7. We were down $7 Thursday. We're up $7 on Friday. Down $7 today. Put this on a weekly for a second. So we get this on a weekly. Okay, so, and you want to understand something. Microsoft's the strongest stock in the NDX 100. Okay, so this is going to be cool to see what happens this week. The reason being is that we came down with volume last week. I mean, Microsoft on a longer basis looks like it's going to come back all the way to like this 242. Right now you're 282. There's going to be some heat here, man. I mean, you know, we got, let's go into the Qs. So we got your first price projection on the ABC structure on the way down with the Qs. That was 352. You went to 350. You're going to have some juice into this. We'll see whether you get any type of bounce. The way that the market's trading, you can actually see that I don't expect this to be the same type of bounces that the market has had seen for quite some time. And the reason I'm saying that is this, is that when it's harder to come out of the low, which is happening today, okay, that most of the time sets up lower price. Now, I'm absolutely, like if we look, my take is that we are going to be bouncing out of here this week. And I think that, I mean, I can see the Qs actually bounce all the way up to 373. So that's quite a way. That's 22 points. But that would be a normal bounce in a market that wants lower price. Because what we're going to have out here today is now we're going to have another high volume low. That's how this thing shakes out, you know. So you get another high volume low. Guess what? It sets up that you want lower price. And the first leg down, yeah, I suspect right there. What is that? 324. Yeah. So we hit the first place. The first place, that's 352. You get a good bounce going. Then it will probably try to break into the lower range. That's actually 342 to get in the lower range. Once it gets in the lower range, then you're going to be dealing with, you know, this big bar that goes back March of 2020, March of this year. And if you're a bull out there, what you want to see this happen very quickly. What you don't want to see happen, folks, is sideways moves in the marketplace. If you get a sideways move in the marketplace, what ends up happening after this downdraft, that's building cause for lower price. It's a very dangerous situation if that's what we have. We'll find out pretty quick, man. That's the real bottom line. And what happens is this. So picture, I'm expecting a bounce, and I'm expecting a bounce on light volume. And then you come back down. This is what the difference is. When you get, let's say we get a quick bounce, 4 or 5 days, okay, with light volume. Then what ends up happening, if you want to see higher price, you'd like to see it come right back down to the lows again very fast because the energy will already be out of the marketplace. When you get something like that, then you can get a solid low in for 2 or 3 months. If it goes sideways, all bets are off. That would be saying that, guess what? We are going south, it's building cause to go south. If we go take a look at the SPY, let's see how the SPY is set up. The SPY's been pretty strong, actually, in this downdraft. So what you got with the SPY here, same benchmark. The low of that was, let's see, we had 147 million shares traded on a daily. The highs, 431, the lows, 421. We hit 426 today, and we're sitting at 427. The longer this stays at 427, the higher likely is that you get to 421. That's how this kind of works also. What we will have out of here today, I believe these, no, it's close. If it actually closed at this lows, it would be a last engulfing. And now this looks fairly bearish, but what it actually is that when you open higher and close lower after a downtrend, that's a last engulfing. And most times you get a last engulfing. The following day, if you go higher, that is saying that higher price is coming at us. Let's go take a look at the active ES mini contract first, see how we're shaking out here. So this has been bouncing off the lows all day long. What we did get is this. My take is that, see this bounce that we got right when I got on the air? That has volume, man. And that's telling me as we come into the close, we're going to get a little pop here. Because if you look at the NQs, you're going to see it also in the NQs. We got, we're 40 points lower than that little pop. And that pop, though, had volume. So we'll see whether, and that pop actually would have brought us over the consolidation. It could have been a lot higher price, but it gave it up in spades. My take is that we're going to go into that coming into the close. Now, if we don't, now watch how this works, which is really cool. Let's picture, okay, first I'll picture, if we go into it, you'll get there and you'll actually go higher. If we don't get into it by the close and we just kind of lay underneath it, what you want to remember is that tomorrow morning as you're coming in, you still broke this whole consolidation and you had some good juice behind it. And that would be saying that you'd also be bouncing up to that level. So it's going to be kind of cool watching this whole thing shake out. We go to the gold contract. We look at gold. Gold wants higher price. The gold equities are moving. They're coming into some heavy resistance, but they're moving. The gold itself, the physical gold, broke the downtrend. That's saying gold wants to run now to 1836. Right now you're at 1767. So I expect you're going to see some action. The dollar, that baby's getting weak. And if that dollar basically gets back inside this 93,500 mark, that'd be a false break topside. If you get a false break topside after we took out a major swing, which we did, that would be saying that the dollar can go to 89. So that would be one monster move, man. I mean, that'd be serious business, which would bring the rest of these commodities up to a much higher price. Dow Industrials right now trading down 369. We get the Nasdaq off 354. S&P's down 63. Stay right there, folks. Come right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Tom O'Brien.
Welcome back, folks. Dow Industrials down 355, Nasdaq's off 345, S&Ps are off 60. Let's go to GDX first. So we're going to take a look at the GDX, XAU, HUI. We take a look at the GDX. Bottom line is that, let's bring it back first. Let's see what we're going into. All of these equities, meaning these indices inside the gold and silver market, folks, have been coming back into their strength from last year. From 2020, actually. You're doing it with a lot lighter volume. Now, the GDX is up 29 cents. That has to get back inside $30.64 for higher price. That'd be the higher range. I expect we're going to get there this week. We'll see how this baby is shaking out. But many of the equities have already done it. If we take a look at the XAU, the Philadelphia Gold and Silver Index, what we have with the XAU right now, that's up 108. This hasn't broken the downtrend yet. Bottom line is that you can see very close. You know, it's basically, well, it's close to it. If I put this line up, it looks like it has. I just don't like, I want to see a break with conviction. Let's put it that way. When you put the trend line up, it's outside it, but I want to see a wide bar. I want to see a wide-ranging bar like we have inside of the gold contract. Gold contract broke it in spades. Silver contract looks like it's broken it today. If we bring up the silver contract out here, and in the same case, in silver, I'd really like to see a much wider ranging bar also. Right now, we're at 22.63. You can see it broke it. Bottom line, I'd like to see another follow through. 22. This is good. Once we get back inside the 22.35, that's saying silver does want to run up to this 24.95 though. And then we go to the gold bugs index. We take a look at the gold bugs index, and we have with the gold bugs index, same deal, meaning you're up 310, but there's still not a break with conviction of this downtrend. But we're right there. I mean, that's the bottom line. We do the trend line, you'll see you're outside it. We're right there. But as I said, I want to see that wide price spread, accelerated volume. Then you know that's a decisive break. This is what's so interesting about the dollar, man. This dollar. This is going to be pretty intense, man, if the dollar comes back inside its range. Now, it's close to it. It hasn't done it yet. We're 300 ticks away from it. It's 93,437. That's 450 ticks away from it. And the reason, when you have a break topside or downtown, folks, okay, and it takes out a major swing, which we did inside the dollar index, and then you have failure, most times what ends up happening is that you just go to the other end of the consolidation. Now, the other end of the consolidation inside of the dollar index is down at that 89 area. And I suspect what we have happening out here, and, people have talked about it, it's like, okay, Bitcoin's at 49,284. I mean, if I was the Fed, you got to start thinking about this dollar. People are putting a lot of energy into alternative currencies, and Bitcoin is the alternative currency. I'm not on it. I'm not a believer in it. That doesn't mean that there's not a lot of energy that's going into it, and that it's a threat to the U.S. dollar on a much larger basis. So we'll see where this goes, but that's what we might have happening right now. Inside of the dollar in general. There's a couple wild stories about El Salvador that they just made it legal. They made it their legal tender, which is a whole different ball game. I mean, it's legal. Specifically, what I mean by that, though, is that then what ends up happening, they are saying that folks have to take it. That's the bottom line. And if you just pull up Google, Bloomberg article, El Salvador Bitcoin, you're going to see lots of. They gave everyone, what they did is this, they gave everyone in El Salvador, folks, $30 in Bitcoin. And it's on an app. And what ends up happening is that you have to basically do one transaction before you're cashing it out. And they got a nation of traders now, making $15, $20, or losing $15 to $20 a day. Bottom line is, I don't think they're going to get much done when they got a nation full of traders. But when you look at the aspect, of how they can get around the banking system, that's where this comes in for the dollar, that this dollar can go a lot lower. Because if you start, if they can figure it out, and you don't need the dollar you don't need as many dollars, let's put it that way. The bottom line is that you'll have things that change. And, the dollar's been king for a long period of time. I suspect it's still going to be king, but the competition is there. And so now we'll see what these central banks will end up doing. But I suspect we're going to see something. Let's go take a look at some of the big dogs. Well, actually, let's go look at Amazon, because Amazon's been making its way down to this level. And, as I said many times, Amazon is always so hard to buy, man. Blows my mind on pullbacks of just it looks like it's never going to stop. And in Amazon's case, the bottom line is that this, 28.81, let me put it on a daily first. Because it's like 29.30 that wants to get down. Daily. You get a nice break downtown. Yeah, this thing's sticking out like this. There it is right there. Okay, so that's, 29.45. That's a high. 29, is that 28? 28.83. The low of that is 28.83. The high of that is 3,009. So those are the two numbers to keep your eye on. Because what that would do, that's the lower end of the consolidation that we're in. And Amazon will never make it easy that it just hits that area and then all of a sudden rejects it and goes higher. We'll find out what it ends up doing if, in fact, it makes us down there. But most times I've seen it that it looks like it's never going to come back. Let's go to Apple, and we take a look at Apple out here. Apple right now, that's trading down $4. That has some volume behind the move, too. We're at 38. Okay, so this is going to be a place to start watching it, man. Okay. Is that 37? Yeah. 135 to 137 is a place to absolutely start watching it. Let me see what this is here. What's that? It's 123. So right now, this is what it's doing. Right now, it's trying to get in a lower range. Anything that gets below, it's the 137. So at 138 today, you get some juice behind the move. I figure we'll get lower. We'll see how it handles that price. Next time Apple's coming out with numbers, they're going to be coming out with numbers October 28th. And, we'll see what kind of numbers they're going to have. I expect they're always going to be good, but they're not growing as much as they used to be growing. That's the bottom line. But they have so much cash, it's amazing. Dow Industrials right now down 360. You get the NASDAQ off 346. S&P down 61. Stay right there, folks. Come right back.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave! Sign up for the Opening Call risk-free today.
Are you looking for a secured investment which pays you on a monthly basis? The Tiger First Mortgage Program may be the program for you. The best rate on a 5-year CD in the country right now, according to Bankrate.com, is paying 1% per year or $1,000 per $100,000 invested. The Tiger First Mortgage Program pays 7% per year, paid monthly, on secured, high-value, buildable properties in St. Petersburg, Florida. The investment is for 4 years, paying 7% per year or $7,000 per $100,000 invested. Your investment is secured by high-value real estate in St. Petersburg, Florida. Your investment can be anywhere from $100,000 to $500,000. Do you want to make $1,000 per year on $100,000 invested or $7,000 per year on a secured Tiger First mortgage? The Tiger First Mortgage Program may be just the program for you. The Tiger First Mortgage Program pays 7% per year, paid monthly. For more information, you can call 877-518-9190. That's 877-518-9190.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Dow Industrials down 397. We get the NASDAQ off 350. S&Ps are off 63. And let's go look at the SPY first. So if you take a look at a few of these, what you're going to see here, folks, is that they got lost engulfing. So lost engulfing is inside of candlestick charting, council charting. Bottom line is a positive deal. You're coming into a doji and you get a lost engulfing. And the way this works on a lost engulfing is that you have to have a higher price tomorrow. Now, lost engulfing, what it does is that you open at a point, you go down all day after a downtrend. In this particular case, we're also going into the benchmark that we were looking at. That benchmark had 147 million shares traded, and we're at 106. So you can see you're at that level. You don't have as many traders selling on the way down. If we go into the Qs, we take a look at the Qs. The Qs right now, though, that's not a lost engulfing. This blew by the swing point. The swing point is 352.04. Right now we're at 351.90. You know, and we have volume. Now here, this is what's really cool. So check this out, folks. Now, I'm looking for a bounce, but see the volume on the Qs? What's that saying is that we're going to be back downtown, whether I get the bounce or not, okay? My take is that it's going to be a decent bounce. But, well, first off, let's say we get the bounce. If we get the bounce, you got to remember that you get a high volume low now and you're going to be back at that level. If we don't get the bounce, the bottom line is that these Qs can be down like a 350.42 in about a heartbeat. You know, I don't think the down energy is enough in the marketplace. When you start, okay, so, you know, I talk about building cars a lot, swing points a lot, volume a lot. What you want to do is incorporate, like, your energy levels, like, and what you see every day, because that's all the market is. The market is energy up, and the market's energy down. If too much of it gets expended, which on the way down it took, guess what? You bounce. Too much of it gets expended on the way up, guess what? You pull back. Always remember, folks, the bear can claw your heart out, the bull can run you over. Thank God there's always another trade. Health, happiness, and prosperity. Have a great night. Have a safe night. Come back and visit Tommy tomorrow morning. Kicks us off 9 o'clock. Great show, folks.